Stocks sliding today, the day after Fed officials signaled high rates may stick around for longer than previously expected. Joining us now is Bob Diamond, CEO of Atlas Merchant Capital and a former Barclays CEO. Bob, it's great to have you back on the show.
Good to be here, Morgan.
You were on CNBC, I guess, about a week ago, and you said then that the markets better get used to, investors better get used to the possibility that rates are going to stay higher for longer and that it's going to take a lot to start to see cuts. Feeling vindicated today?
Yeah, I mean, we've talked about this before, Morgan. The bar for, reversing the position for the Fed is very, very high. We did feel it was time for a pause, and they have paused. But I think one of the things we're seeing in the survey, the summary of economic projections from the Fed presidents and the Fed governors, is when they project out for the funds rate at the end of 2024, it's pretty flat to where it is today, slightly below. So I think even that kind of supports the view that rates are going to stay higher longer.
So I guess walk me through what that means for the trajectory for inflation coming down, because we do have some structural shortages, including in some of the more interest rate sensitive parts of the economy. Look no further than housing and the push-pull with inventory there. We see gas prices and energy prices on the rise, with supply-demand dynamics shifting in the oil markets as well. How much are some of these dynamics a challenge, or maybe an unprecedented challenge, dare I use that word, for the Fed as it does use rates to tamp down inflation?
We think they're doing a pretty good job at it. We think it's at a pretty good level. We think people will get used to around 3% inflation. But I think if we're wrong there, and as you say, if some of the thoughts that we have are too positive in terms of inflation being tamed, then I think we will see more rate increases. When you look again, like every 3 months, Morgan, the Fed presidents and governors do projections to the end of the following year. And the difference between June and today's release, or yesterday's release, they mark up GDP, so they think it'll be 3 to 3.5 at the end of 2024. They mark down inflation just a bit, and they see rates staying pretty level. So I think that's the new normal, and that's where we are today. As you say, if we see a surprise to higher inflation, I think the Fed is prepared to move again. We don't expect that will be necessary. It'll be very data dependent.
Bob, I want to ask you about regional banks. The KRE regional bank index down under 42 right now. Yeah. So, I mean, if rates are higher for longer, these loans for commercial real estate are repricing. What is the upside scenario for the regional banks that are going to get potentially left holding the bag?
Listen, as you know, John, we're very positive on regional banks. We think they're incredibly important to our economy, to the depth of the financial markets in the U.S. We do expect to see some consolidation there, but I think on balance they've adjusted pretty well to the higher interest rates of 5%. And as you and I both know, if you can level set that and manage to where they are today, higher rates are positive for banks. So 5.5% rates starting from scratch are far better for the community and regional banks than zero interest rates and free money that we had for so long. There's a lot of concern about commercial real estate, but to be perfectly frank, are we really worried about commercial real estate in small cities in Iowa where community banks are investing in downtown? I think it's much more around the big cities than it is around community banks and regional banks. So I think we have better news ahead. While we will have consolidation, I think as the regionals and the specialists have adjusted to higher interest rates, I think they're going to perform better.
Yeah, we are starting to see some deals, particularly among some of the smaller banks, as you mentioned. Speaking of deal making, got to ask you about some of these recent reports, Bob, that there's a bidding process underway for SVB Capital, and that a duo of Anthony Scaramucci's Skybridge and your company, Atlas Merchant Capital, are among the front runners for this asset. Your comment?
Well, as you would obviously know, if we were working on a situation, it's not something that I would discuss right now.